Hey everybody, this is Brendan with Business for Chummies. Today we're going to take a look at how you can fund a retirement with a side gig and compound interest. That's right. A lot of people get very intimidated when they think about how can I retire with the money I'm currently making. It seems like a daunting task, but when you break it down and you look at the math, it's actually a lot more feasible than you think. It doesn't take a brainiac to figure out how to develop the wealth that you need at a later stage in your life to retire comfortably. So first we're going to talk about what compound interest is, because compound interest is one of the greatest ways to develop long-term wealth. You're essentially making your money work for you. So let's take a quick example here. We're looking at an interest rate of $5. That means I'm going to make some sort of investment, and every year I'm going to earn on average 5% of that investment. And we'll see this in kind of a real life scenario in a little bit. So in our example, year one, we don't have any money invested. We're starting off with $100. So we're going to put $100 somewhere. We'll talk about, where those somewheres are. And throughout that year, we're going to earn 5% on our $100. So by the time year two rolls along, we should be making our $100, and then we should be making the interest of that $100 on top of it. All right, you with me? So we earned $100, or excuse me, we earned $105, which is 5% of our $100. Now, year three, what's interesting, what's going to happen is now not only are we making the interest on that $100, but now we're making that interest on that additional $5 we earned. So it's not just another $5, right? It's not just going to be a straight across $5 that we're earning. You'll see what happens here. So now we earned that $5 that we initially earned year one, but we also earned this extra 25 cents. So right now, over our first 2 years, we'll pull this out. First year, we earned 5%. This is the interesting part. The second year, we didn't just earn another 5% interest. We earned a 0.3% increase on our interest. And so what happens if we extrapolate this out to, let's say, 5 years? You can see that the amount we're earning each year is increasing simply because we're reinvesting that interest that we're earning in a dollar amount, right? That 25 cents, that 50 cents, that 75 cents, it's going back in and we're now earning interest on that interest. And as you can see, it's not creeping up by 5%, 10%. It's adding and compounding on itself. And so over the long term, over a 10-year period, over a 30-year period, you're not earning that simple interest. Whereas if you were expecting to earn 5% over 10 years, you would have thought, I'm going to earn a 50% increase on my original investment. No, you're actually earning a 55% increase on your original investment. Now keep in mind, this is not with any additional contributions. So the way compound interest works is whatever money you have in there, it's going to, slowly and steadily increase in value on an upwards curve. Now, the way you get this curve to be exponential is obviously by increasing your total value that you have on which you're earning interest, and that's where your monthly contributions come in. So that's kind of the basic overview of our compound interest. Let's take a look at how this works in a long-term calculator. So I'm here on investor.gov, the official compound interest calculator for the U.S. Securities and Exchange Commission. And let's just look at our initial example to make sure that we're doing everything right. So let's say we started with $100. In our first example, we're not adding any monthly contributions. Let's just see what happens over 2 years at a 5% interest rate. All right, so you can see 110.25. Let's check our math. Yep, everything looks good. All right, and then next what we're doing is Really where this takes off is with the monthly contributions. So we started with our $100 our first year. Let's see what happens with every month we add an additional $300. So look at that. Just over 2 years, we're now getting some significant returns. But we're looking for the long term. This isn't a short-term play here. This is a retirement plan. So we're looking at 20 or even 30 years down the line. So you'll notice with just a 5% interest rate, which is pretty conservative, over 30 years, just investing $300 a month, you can expect to earn upwards of over 200K you should have in your investment portfolio. And so that's not something to balk at. That's a pretty decent chunk of money. Now, interest rates vary as far as returns, interest returns. Um, if you're expecting to earn maybe a 7, 8%, some of the other investment options and platforms that I discuss on this channel, you can get into the double digits here, and you can see dramatically how that changes. Um, you know, if you can push this up as much as you can, as much as you can afford to, you have a pretty sweet sized nest egg waiting for you at the end of this road if you can make this happen. And so the issue is not necessarily, trying to figure out the math. The math is there. It's trying to find those investment opportunities that are going to give you that compound interest. And then the real kicker, right? It's how do I get this extra $500? And a lot of people think, well, what I could do is I could just scrimp and save with what I'm currently making. I could try to maybe not go out to eat as much, um, impact your lifestyle so you can save some money and put it away for retirement. But that's the wrong way to approach this. Believe it or not, it's much harder to save than it is to just make more money. Think about it. How can you, with your current skills, with the people you know, with the equipment you have in your garage, with um, whatever technical abilities you have, how can you make another $300 a month? It's not that hard. You could do that at a part-time job. You could go work at McDonald's for a couple hours a week and earn an extra $300. That would fund your retirement. Now, obviously, going to work at fast food, it's not called fun food, it's called fast food because that's not a great job. But think about it. How can you earn some side money? There's a million ways to do it, right? You can go out and mow lawns on the weekend, start a pool cleaning business on the side where you go out once a weekend to a couple neighbors in the area, um, start a art show, do whatever you need to do to make $300 a month. Once you have that $300 a month, you invest it into some asset that's going to give you that compound interest. And so let's take a look at what one of my favorite investment platforms is. I have it up here in the tab. It's called Fundrise. So Fundrise is a real estate investment platform where you can, with as little as $100, start an account. And what you're investing in is groups of properties. And you earn income from those properties generating rental income or appreciation when the property sells. And so here I'm on the Fundrise website. This is all public information. They've got this nifty graph here, which is the real-time returns of all of their current clients. This is over 400,000 accounts that are displayed in this data grid here. And you can see their year over year returns on average for the entire population of these 400 accounts. If I scroll down just a little bit here, these are the actual returns of all client accounts over the last, what we're looking at, 5 years here. And check out my other video related to Fundrise where I actually walk through the inside of my account as a logged in user, and you can see some of my returns and the fees that are associated, etc. But this is a great platform. You're looking at 10, 8, 9, great year in 2021, 22% return. We're about halfway, a little bit more than almost, we're about the third quarter right now in 2022. So the year already has returned 5%. We would expect this to maybe get somewhere around 7 or 8% this year once the final quarter closes out. But great returns here. You're looking at averages of 8, 9%. When you have a really good year, your average is going to bump up to maybe a 10% return. And imagine what that does to your $300 if you had a 10% return on your $300 monthly investment. That's almost 600K at the end of your ride. That's pretty good. And so this is one of my favorite investment platforms to use. It's extremely easy to use, very transparent, and it really gives you a concept of how your money is growing for you. And it utilizes this compound interest approach. As your money gets earned in your account, it gets reinvested back into your different portfolio assets and continues to gain interest for you. And you'll see in my video, I'll link it in the description, how that money is now working for you and growing for you as you go along on this journey we call life. All right, hope you learned something, had some fun. Don't forget to subscribe to Business for Chummies for other great videos every week. We'll see you next time.